which India is going through digitization, which is sort of the core sort of requirement for anything that has to do with true financial services. I think we're still sort of scratching the tip of the iceberg here. What we're seeing is sort of, so far, is the FinTech 1.0 generation, where, as Varun also pointed out with insurance, started off largely with the aggregators, whether it was a Policy Bazaar or a Bank Bazaar type of a play. And only now we've sort of gotten deep into the phase of digitizing, of new products coming out, because the customer is now, digitized and data is being digitized. But even now, I think India suffers a lot from a thin file problem. As even Lizzie was talking about, only 60 million people can ever be served by the banking system today. So if we have to change that, I think we're going to need to start doing things which have never been done anywhere else in the world, perhaps. Digitization of a lot of information, whether it is attendance data for employers, whether it is vehicle information for logistics providers, whether it's, proper healthcare records and things like that. So I think all of those, and education is another one, all of these verticals are just getting digitized right now. And that's going to create a lot of unique data on the back of which FinTech will be, financial services will be done. Whether the FinTechs will pull it off or whether the incumbents will, or whether it's a partnership between the two, my personal opinion is I believe in partnerships. I think the incumbents have, this is a space of trust, and the banks and the incumbents have a lot of advantages. So the FinTechs, I think, will do well to partner with the incumbents.
So you see data being the new oil here too, right? In terms of FinTech. So is your perspective similar in terms of, thin file, as Sanjay put it, very little data, but now we're getting more data rich, and so we're able to bring in some of these new paradigms, right? Technology-driven paradigms.
Yeah, can you guys hear me? Yeah. I'm not as deep into financial services as Sanjay is, but we sort of, as I know Prime does as well, we focus on a lot of different sectors, and I just want to give a little bit of perspective in terms of sector evolution. 2010 onwards, we had a lot of e-commerce happening in India. 2013, 14, 15 was when all the on-demand companies got funded, on-demand cabs, on-demand food, on-demand lodging, etc. We have a company called Oyo in that segment. And then 2016 onwards, when the financing market sort of got a bit subdued, we saw a lot of other verticals start to emerge, especially after Geo got launched, after GST came in, and a bunch of these other forces came into being. And so what we're finding now is the number of sectors has broadened a lot in terms of what we see interesting startups in. We see content, we see education, we see financial services or FinTech as one of those newer verticals. And we see B2B businesses of all sorts coming up. So the market's broadened a lot. And in that context, if you look at all these different verticals, FinTech, from my perspective, certainly seems quite a busy sector. And in some subsegments of FinTech, quite overfunded. So that's one perspective on where we're seeing FinTech. The other one is, it feels like FinTech is becoming a business model in addition to being a type of company that is built. It's not just a lending company or an insurance company or a personal financial management company. We're seeing it as a business model overlaid on any other company out there. That's interesting, but also scary a little bit. Everybody wants to be a lender, right? Everybody wants to be a payments company. Everybody wants to be an aggregator of information. We've backed a company called Setu that is built on that thesis a little bit. It provides a platform that anybody else can plug in to provide financial services. It's very early still. But that's the second development here. Everybody wants to be that. Education companies want to be FinTech companies. Forget FinTech companies wanting to be FinTech companies. So those are the two interesting things that are happening, just to put it in context.
I love it that you're provocative up front, right? I think you're pointing out that, even the platform guys, the Googles, the WhatsApps, the Geos, they're coming in, Flipkart. Everybody's a FinTech company, right? So, I guess critical mass will matter. So this is a good one to ask you, Vikas, then. It's like, where do you see that going? And, where do you see yourselves playing as you look at it, from kind of the reliance perspective, right? Geo perspective.
At a 30,000 feet level, I think, year one, we sort of went after the connectivity business at Geo. So I'm talking about we're in the third year of Geo. Of course, as we know, we're now 320 million consumers, adding 10 million net a month. So that's where we are headed in the mobility side. We, of course, launching the fixed line piece as well. So we're saying whether home or out, we should be your provider of choice. We then moved on to the year two on the content business, right? And if you look at Geo TV, Geo Cinema, and now Geo Savan, cumulatively put together, right? We are one of the largest, destination for digital media streaming in the country with respect to consumption. The average Geo user uses about 18 hours of video a week, right? And there's a lot to learn in that. There's a lot of monetization ability in that, yet to be completely figured out. But there's an opportunity there. And the third year, we're now going after commerce, right? And to us, commerce has two legs. One is the whole what media has written about the Kirana commerce piece. So we're saying, look, 88% of India is still shopping at traditional Kiranas for the grocery. It's a $500 billion plus market. Can we digitize that market, and therefore can we build sort of a B2B2C business in that, right? Understanding daily needs. The philosophy has always been let's serve the daily needs of the consumer and add value to their lives, and therefore use some disintermediation and technology to pass on more value to all players in the ecosystem. So that's leg A of the commerce business. And leg B of the commerce business is our entire financial services strategy around our payments bank. So whether it's the whole asset side of the business or the liability side of the business, both are large opportunities. As we heard in the room today, we are severely underpenetrated in the country with whether you're looking at $1 trillion lying in bank deposits, and therefore what you can do with that, or on the other side, less than 1% of GDP going into lending, and therefore what can you do with that, right? So that's a strategy. So we obviously have views on what our plays in that particularly are, and we're going after using our assets in the business. So we have 300 million consumers that we touch online, 300 million consumers that we touch offline who walk into our 10,000 stores. So how do we leverage that asset base, our understanding of data, to be able to create business models?
So Srikrishnan, I'll follow up on something Dave said. He said he's a little scared. The market looks a little crowded, looks maybe a little hyped up, lots of players. I'm characterizing here, he may disagree with that. But, does that mean it's a rich opportunity for you all? You're looking at lots of different models, you're seeing lots of folks try different things, and then you'll pick out what you want to do?
I would not want to say absolutely I agree with that, because we want to encourage thinking and making sure that, ideas are generated all around. Just when at Geo we think that, we have kind of more or less comprehensively covered every bit of whatever that, we are getting into, and every bit of whatever that we got into belongs to us. I mean, that's, grand thinking, which we go. But a meeting like this and invitation of ideas and presentations actually opens up our mind to say that, there are hundreds and millions of other problems which are still existing, and there are a bunch of guys who are actually chasing those problems and solving those problems. So as a result, what happens is this is a continuous journey, Ravi. This is not something that, we just start and end with a very finite timeline. This is something that, is a continuous journey, and we are all part of the journey. All that I can tell you is that there are certain ecosystem, driven kind of solutions which are large scale in terms of reach as well as in terms of coverage. There are some which are very point specific, particularly because there is a problem which is taken up and obviously it is being solved, and very well so. Now, the idea is that, we should at some point of time as an industry converge and making sure that, this convergence results in benefits for all the participants in the chain, starting with the consumer as well as the small businesses and of course the startup and the larger ecosystem players such as ourselves. So we believe that, collaboration and making sure that, we all work together and this continuous generation of ideas to the continuous generation of problems, is something that will take the country forward as a whole.
Right. So you've got UPI, payments should be solved, right? If we go cashless, do you need all these companies that facilitate in the middle between your bank account and, the point of payment, let's say? Or a lot of these startups then going to find themselves in no man's land.
So the second part is a little trickier. I can't play soothsayer here. I wish I could. But
my predicate is, let's say UPI is truly successful, like the government wants it to be. It's ubiquitous, everybody's connected. It's P2P, P2 bank, P2 vendor, whatever, right?
So I think what will happen is, companies will effectively payments is now becoming deeply integrated into any form of a sort of a business workflow. Right? And whether it's a personal payment, whether it's a payment in a certain context of splitting a bill on the consumer side, whether it's a repayment of a loan, whether it's an advance payment for something, whatever, or when you're looking at school fees, or you're looking at pay later situations in the checkout situation. In all of these now, what's starting to happen is by moving payments into APIs, essentially business workflows can now deeply integrate payments in sort of a very natural way. In some ways, I feel UPI also is a protocol. Right? The fact that today it's working with the savings instrument doesn't preclude it from working with the credit instrument tomorrow, or with a or any other form of instrument that may come about. And so that's why I actually feel mentally we need to stop using words like line of credit, credit card, and all of these other terminologies that are there. Because it's very simple. Is it my money or is it the institution's money? If it's my money, it doesn't matter whether it's a wallet or prepaid or debit card or a bank account or a savings account. It's just my money. The same way, if it's other people's money, if it's borrowed money from an institution, it's credit, right? Whether you like it or not. And they would call it, I guess, assets, right? Where they've given money to other people. Now, so the concept of what is a card itself and the notion of that is going to change quite a bit. And I expect over a period of time, a UPI or a UPI-like experience being as friction-free as it can and natively integrated into the workflow is going to happen across the board, regardless of what the instrument is going to be. But adoption, we're a long ways from there, right? I think probably everybody here in this room uses more physical cash than digital money today, right? Or certainly more frequently uses physical money than digital money. And that has to change, and I think all of us are going to have to sort of make that change happen. A few important things that have happened, regardless of what may have been the goal of demonetization and what ended up happening or not happening as people may claim. Today, my milkman says, I'll send you a link, you can send money to my, whatever, use Paytm, Bheem UPI, here's my account. Newspaper guy says, I'll just come and collect once in 2 months, I'll send you a link. This was not happening 2 years ago. So I think the mindset of at least accepting that somebody could pay me digitally has come about for the most part. And over the course of a few years, I suspect that most people will move to largely digital transactions, especially if that means they can access credit. So once they see the benefit of credit, you'll see more of this happening.
I like that clarity of, it's either my money or it's credit that I have to pay some interest on, right? So Dave, coming back to the point you made, which is that there's kind of an underlying business model that you see more in these companies, and fintech is more about the business model downstream, right? Elaborate a little bit there. What do you mean by that? Give us an example.
Yeah, I think we saw some of it today in some of the startups that presented, but what I'm talking about is anybody who aggregates an audience. Could be a Flipkart or any e-commerce company, could be a...
Well, let's take one of your portfolio companies, Oyo, what would they do, for instance?
Oyo, the on-demand lodging or share chat, content, anybody who aggregates an audience of any size and then has some data on that audience and maybe on the back end integrates with other data sources to figure out some sort of, or has some sort of aggregated data, can now theoretically become a lending company or a payments company or information aggregation company of some kind. That's what I mean. And then they get paid for it somehow. I think today you've got mostly verticalized companies saying they are fintech companies and they do all this on their own. The question is, can that be API'd and then consumed by anybody who owns an audience? It could be as large an audience as Geo has, or like WhatsApp has, or like anybody else has. It could be smaller companies that have 5 million, 10 million consumers as well. So that's all I mean. It's become, there's a threat that it becomes commoditized. I don't think it's that easy, but there is that threat out there.
Got it. So tell us a little bit about both of y'all, the companies you all have invested in that are in the fintech space. Just a couple of liners on and what your thesis was going in.
We bucket them into two things. One is pure play fintech companies, and the other ones where there's a business model layered on top. On the pure play side, we've got a company called Red Carpet, which is unsecured lending initially to college students, and then in theory they'll go after other unbanked or underbanked next billion user type users based out of Gurgaon. The key thing they've solved is fraud and collections, and scaling nicely out there. That's one.
See that as a big market potentially.
Yeah, if college students itself, no. But if you can then extend that beyond to the underbanked audience, as we've talked about today, then yes. And you can do this in a very numbers-oriented, analytical way without paper and all that sort of stuff. So that's one. Another one we've done is Setu, which we talked about, which is more of a platform layer, which can enable any audience company to have a fintech business model, in a sense. That's the theory. It's very early still. We've got two folks, very smart folks, Nikhil and Sahil, going after that opportunity. Another one is called Priority Vendor, which is invoice discounting. So invoices of large companies, of small companies, sorry, that have to be paid by larger companies that they supply to. This is the marketplace there in the middle. So these are some sort of quote-unquote fintech companies. And then more horizontally, we've got companies that use fintech as a business model. We've got a company called Uran, which is a B2B marketplace between retailers and their suppliers, a commission-free marketplace to transact. But then on top of that, they add logistics and credit as business models on top of that. We've got another company in our portfolio called OK Credit, which is a set of Play Store utilities for micro businesses, sub 10% businesses, growing 10% a week for the last 60 weeks without any marketing. Massive demand for this stuff. They will add financial services as a business model later.
Tell us again exactly which market they target.
So anybody, any small business that's 10 people or less, kirana store, mobile store, shoe store, your vegetable telawala who comes to your door, anybody, they've got a set of utilities that person uses. Typically, they've used a khata.
The Khata book type proxy for lending.
This is the first book. Khata book is the copy.
Okay.
And came along later, and this is bigger. Okay, credit. But everybody has got these khatas, khatas of what their customers owe them, Udhar khata or Bahi khata, khatas of what they owe their suppliers. Ton of business in India is 90% plus of businesses in India are unorganized and happening in these registers. This is just digital utilities, essentially the modern form of enterprise software for micro businesses. And then you can form a network out of it and lots of data, there's lots of stuff you can do. We're very excited about that sort of business.
Got it. And Sanjay, just walk us through your companies and the thesis going in.
Sure. So yeah, so we've got about 12 or 13 companies now in the fintech portfolio.
Give us those.
So I'll just give you a quick overview of some of them. So obviously probably the most well-known ones are EasyTap and Happy, which are serving businesses EasyTap from a payment acceptance. So it started off initially doing their own terminal, now have opened it up, and actually they've stopped manufacturing hardware and completely a software company allowing large enterprises to accept all forms of payments across omni-channel. Then we have Happy, which is a business expense solution, which is for the CFO's best friend. Gets you to see how and where money is being spent from the corporate. Whether it is across the card, whether it is just digital payments to vendors, etc., and being able to enforce all the corporate spending policies in real time, in the line of the transaction. So actually being able to block a transaction if it's even if it's a card transaction. Then we have a company called Neo, which is in the salary space, enabling people, like blue collar companies to get salary accounts for their employees. It's a space that, despite all the Jan Dhan and things like that have happened in India, is actually very poor penetration and service in that segment. They also have a separate product which is helping Indians to travel overseas without having to buy this mumbo jumbo for Forex card. So you literally get an account with them instantaneously with your eKYC or whatever is now allowed. Load rupees into it and you can go spend anywhere and you'll get the lowest transaction rate, exchange rate. It's a Visa card. Then we have Credix, which is also in the invoice discounting space, has been doing, it's hit some pretty big scale now and doing pretty well. MoneyTap on the consumer lending side of things. Then we have a couple of companies that are sort of at the intersection of, say, healthcare and financial services, one called Afford Plan, which is doing very well. Real estate and financial services, Smart Owner, another one in the logistics space that's still sort of working out. And then what we have started recently looking at are companies that are really taking on the infrastructure a lot more aggressively. We are seeing, a lot more so digital payments for a large company was always a small sort of side hobby business, right? But now all of a sudden, as we are all projecting, digital payments are going to go through the roof. Companies are going to do a lot more a lot higher percentage of their payments will be digital. So issues around, transaction reconciliation and things like that are going to become pretty hairy problems. It's between them, their vendors, their customers, the banks, etc. So we backed one company in that space, and we're looking to see a lot more. I think we will start seeing a lot more B2B fintech opportunities that will also use a lot of AI and ML because the data volumes are going to be huge.
Great. So, Srikrishnan, what I wanted you to do was give the startups who were pitched earlier some feedback, right? In terms of just generally, both of y'all, if y'all could do that at a very high level, that would be useful in terms of, and also tell us where, from the geo perspective, you're headed with startups, what kind of model you'd like to see, because I think everybody's back in the room now after our deliberations and pitches.
Besides having some one-on-one conversations that, during lunch or, we have already fixed some follow-up conversations as well. But overall, let me put it this way that, from the overall geo financial services and overall geo's perspectives, two things. One is that we are trying to build an ecosystem, and alongside that particular effort, whoever is wanting to participate, whoever wants to collaborate, and making sure that, there is a play where jointly we could kind of win the market together, where the small businesses and the small startups, that you guys are trying to do, if you want access to a very large ecosystem and you can collaboratively kind of work with us, we are welcoming with open arms. That's the first message. The second message is that, contrary to whatever the mindset which is there to say that, I'm a promoter, I'm a founder, this is my idea, and this is an idea that I'd like to keep to myself. Well, of course you can keep it to yourself. Your aspirations are not going to be short-lived. But on the other side, your aspirations are only going to kind of get fulfilled much bigger than what you think because of this access that Geo provides. So from that perspective, I don't think there is any fear in collaborating. So that's the second myth that I want to kind of make sure that the message is conveyed. The third, and this is a very important thing, is that together actually it could result in a much bigger, larger benefit to both of us mutually, and which means that whatever that you had as plans, whether it was an exit strategy or whether it was a co-investment strategy thereafter or some kind of a larger partnership strategy, I think if those can be accelerated through this, again it will only be helpful for mutual benefit. Specifically on a couple of startups, and without having to kind of take names, but I think we like the founders and the kind of the management team in a couple. So we can call out a name, like for instance, we talked about it to say that the early salary part, we like the founders, but then from our own sequence, in terms of where and how that will fit in is something that needs further discussions. Likewise, there are two of them who are platform players. One was the backend and the kind of a solution provider for NBFCs and microfinance institutions. The other one was again a kind of a simple one, two, three steps for digitizing smaller businesses, merchants. So both of them are definitely areas of interest from Jio's perspective. But having said that, there is already an effort, and we need to kind of match those efforts and see whether or not those gaps that we do have are getting filled, or there are some alterations to the plans that the founders have, which will kind of benefit both. So
Thanks.
this is this.
Vikas, did you have to add anything?
No, I just say, I think two things that we value the most when we look for partnerships are, one is a product or a platform that you've gone out and built, and it's easier said than done, but to be able to build, both a sort of frictionless consumer experience at the front end, and then to be able to build a highly responsive, scalable backend are both, especially in the fintech space, are much easier said than done, right? So if I just go technical for a second there, when we look at scalable systems, real-time systems at Jio, we're talking about things like 100,000 TPS, right? Which is, whereas the market, startups might talk about 100 TPS, right? So we're saying if products have been built in such a manner where they have that ability to scale on both sides, and therefore scale adoption, that's something we'd be very interested in. And the second one is, of course, a very high quality team of having put together a team of whether it's founders or the team below the founders that have the domain expertise that has brought this together, is also an invaluable ask to be able to put that together in a high energy environment, and then to sort of use Jio as a catalyst to just provide our distribution and our capital to help them grow. That's what we would look for.